Your host today is Carol Talon and myself, Brian Fox.
Okay, so today we have Richard Collins, CEO and founder of Walfrid Private. Thank you so much for coming in today, Richard. So you might just talk to us about Walfrid Private. You're involved in wealth management.
Yeah, so thanks for having us. Walfrid Private is a wealth management company, and we're Irish owned. We were established in 2012, but the client bank has been moving for a long time before that. We look after company directors across Ireland from a wealth management perspective. We show them how to protect, accumulate, extract and retain wealth. So, yeah, that's basically in a nutshell.
Okay, and obviously when we're talking about wealth and retaining wealth, from our point of view, property is the key way to do that. So I assume that's something you're involved in?
Yeah, so we have property plays. People like to have property in their portfolio as part of a diversified approach to investing, but what we find more and more is that people don't like the volatility of the stock market. So the correlation between the different asset classes, people might look at their funds on a daily basis and they'll be up and they'll be down. What they like about property is that they have cash flow. So what they see with property is cash flow rolling into their portfolios, and it's fixed. When it goes in, it's in. It doesn't move the next day unless there's expenses. Mm-hmm. So yes, I'd say the last 12 months especially, we've seen a bigger move towards more heavier weightings of property within portfolios.
Oh, that's interesting, and particularly when you talk about the volatility of the stock exchange, because on balance, you know, property has outperformed the stock market, but only barely actually after the last crash. So from that point of view, the people who are coming into you, like, what's the profile? What kind of money are you talking about? Are you dealing with mom and pop, or who are you dealing with?
Yeah, we're dealing with, again, as I said, we set Walfrid Private up to look after company directors, and because we bring them on a journey from protecting wealth up to selling their business and everything that happens in between. But again, like without giving the secrets away, we manage pension funds, we manage personal money and business money, but we find more and more it's the pension money that is going into property, and the reason being is there's a lot of government incentives that will give people certainty of cash flow into the future. So there's 25-year leases available with 80% of the market rent available, guaranteed by the councils and the government. So when people come into post-retirement structures like ARFs, they have certainty that they can get a return above 4%, and maintain the value of the fund as well. So,
when you talk about pensions, do you mean people's individual pension, as in you're not really dealing with the larger investment, I suppose the larger pension funds, it's more you're administering on behalf?
Yeah, so what we would do is we would steer clear of group schemes because it's not our appetite. We focus on the individual company owner and maybe the spouse or the other directors that might be involved. They've much more freedom of what they can do with their pensions as well. Group schemes, if you're in a large multinational group scheme, you're kind of bound by the trustees, whereby you would have to buy funds or whatever the consensus was within inside. But as a company director, you can buy those funds, but you can also buy direct property, so commercial or residential, and you can rent it out and get tax-free rent and tax-free growth on the money. So it's very attractive for people.
And I was just wondering how attractive are pensions nowadays, and you know, in terms of what happened during the crash as well, because a lot of people lost their shirt on that.
Yeah, absolutely. Like we've seen it nationwide. With the crash, say 10 years ago, people just left their money in. If you're talking about funds, they left their money in high yield equities. So the savvy investor was out probably around 06, 07 in deposits, and they rode the storm out. But then the people who stayed in consensus and managed funds that would have an exposure of 80, 85, 90% in equities, they're the people that got burned.
Yeah.
Unfortunately for people who were close on retirement, it took 5, 6, 7 years for them to get that money back.
I mean, from the point of view of avoiding the sort of pension route, is what you're talking about now, does that pay off pretty well in terms of wealth management? Investing in property?
Oh yeah, well, investing in property, again, it gives certainty of cash flow. So like what the beauty is now with pension pots is that they can use gearing within to acquire property. So certain lenders out there will give up to 50% loan to value, and again they can use the power of leverage in a kind of conservative, controlled manner. So you're not going back to the 100% mortgage days where it was kind of a hidden hope for growth. So now it's much more restricted. And again, this property within pension, as I already alluded to, you have all the tax incentives. But your earlier question in relation to pensions, do they work? A pension is only a box.
Yeah.
Okay, what goes on within that box is entirely down to the individual. If you're going to invest in equities, you can invest in equities, you invest in property. Once your comfort threshold to risk is true to what you actually believe in, you won't have the big swings.
But sorry.
No, go ahead.
What I'm sort of, if I come to you with, wanting to invest with you, and we know the volatility of the construction business as well. How do you, how do you assuage a potential investor going into that? Because you hear of property hitting a bubble and perhaps collapsing. There's a certain sense of nervousness around property
There
as
is
well.
Even like at the moment, there's people are reading all the paperwork that they or the news that property prices rose. They're probably at a plateau, and rents are too dear. But if we've seen what's in the news today, another 10 years we're going to have assumed rental growth, because there's not enough output being produced. So from that perspective, when people come to us, there is negativity around property. I'm not going to lie, we've all seen what happened. It basically crushed the economy. But again, when we sit down and look at the mechanics and the fundamentals, is that rents are high. You can have a long-term tenant in the government if that's what you want. You might get more on the open market, but there's different strategies that you can use as well to basically sweat the asset and the floor plate of a particular building, subject to regulations, of course, whereby you can turn a usual family-let single house into what we call a HMO, which is a house of multiple occupancy, whereby you might be able to have a bit of floor gain by turning one of the living rooms into into an extra bedroom. Okay, and again, we don't encourage whereby you would have 10, 15 people living in a 3-bedroom house, but again, there is an opportunity to get an extra bedroom out of a floor plate to basically stretch your yield. So
I think this is something that's done very well in regional cities across the UK, but in Ireland there seems to be this persistent regulatory climb away from that. So what you're describing there, we would have seen most typically, 2 decades ago as pre-63s in and around Dublin. And the regulations in terms of fire safety, they were exempt, but now we're coming to the end of the properties that are there and available that were exempt. It's very difficult to get a 3-bed semi into a HMO, but that might just be my perception based on the regulations. So how are you seeing that done on the ground?
So in the UK, it's very heavily regulated, the HMO side of the industry. Over here in Ireland, it's not as regulated, but we encourage the regulation to come because it will help with the rental crisis that's out there. So the sooner the better they bring in the regulation, that we will actually have the opportunity to plan for the future. Because what we have now is a lot of investors who are looking to buy these houses. They're looking to turn them into HMOs, but because there's no, how will I say it, accurate policy on it, that people are kind of hitting and hoping again. So
yeah, but do you not think they're happening anyway? But I'm just wondering about the compliance, because I don't think our enforcement, like if we just take the capital across DCC, we know that enforcement of private residential, we haven't even hit the tip of the iceberg in terms of quality, in terms of regulations. But where inspections are done, we know that they're above 90% non-compliant.
Yeah.
So we know that this is a problem. We know it's a problem in Cork. We know it's a problem in Limerick.
Yeah.
And they're only the inspections, but the inspections that have been done are barely 1% of the stock in the market.
Absolutely, yeah.
So this seems like a good time to bring in regulations. And I don't think it's even about the regulations. It's almost about clarifying the position, or maybe clarifying where HMOs stand in the current regulations, because we're dealing with this issue with co-living, and there's a definite concern that HMOs and co-living will be subject to very similar legislation, which might not be helpful.
Yeah, so look, I spoke to this Stephen O'Sullivan from PPN.
We've actually had Stephen in before, a Progressive Property Network meeting in Sandyford, the first Tuesday of every month.
Yeah, that's it. So basically, what we kind of ascertain that is people do want HMOs, okay? They do see the value in them. It helps investors, and it helps the social problems around the lack of stock for people to live in. So again, myself and Stephen, we spoke a lot on this recently, and the sooner the better this regulation comes in, we will have clarity and people can actually start to plan a business. You see all the time now that the overseas companies are coming in. They're buying a lot around the Liberties and whatnot, hoping to turn stuff into co-living.
I saw that's actually those plans have been granted to the collective.
Yeah, so again, the smaller investor that's not institutional will they will want to do that again to increase their yield. But I just feel that there's a lot of skepticism and people see it as a dirty word within the industry. Because of all the negativity that you would have read over the last 3 years. So I would encourage the government and the powers that be to come out and actually set the regulation.
Just let me ask you a question too. Irish people, do they see the house as a place that they're going to live in for the next 20 years, or as an investment from what you hear?
Yeah, look, there's commentators out there internationally that talk about property, whether you should own your own house or not. Different countries, they have a different philosophy towards property. It's something that you can rent, something that you can that you don't have to take the depreciation if the prices fall. Again, it's entirely down to the culture in the country. But I think our culture, after our history, being a victim of feudal systems, people want to own their own home. And the majority of people, I would say that 99.9% of our client bank would own their own home. And again, they tiptoe into residential investment property and whatnot in the hope of creating passive cash flow.
Right, yeah, because I see you've got a property training company as well.
Yeah, so that's something that has popped up recently. We've had a lot of inbound queries about being able to buy properties through pension and whatnot. Yeah. So we've come together, my brother Eddie, background in education, Paul Green, a construction man, and myself, finance. We came together and set up a company called Platinum Property Training. A lot of people have been going to the UK and other jurisdictions for property training, where a lot of the a lot of the course content was kind of applicable on a macro level, but when you try to pull it back to the fundamentals and the operating environment within an Irish context, a lot of it doesn't work.
And actually, I think that maybe there isn't an appreciation of how many people do travel to the UK to do these courses and then come back and they try the strategies, particularly around HMOs, off-market sourcing and below-market value sourcing. Yeah. And then they realise that actually estate agencies in Ireland operate on a slightly different basis as well.
Absolutely.
And landlord mentality can be very different. Yeah. So, but I think it's worth pointing out that a decade and a half ago, we actually did have this type of training in Dublin. There was at least 2 or 3 different groups that were running training, because landlords actually, a lot of them are not necessarily accidental, but they start quite small, but there was no formal training for them. So it's exceptionally important, particularly around areas such as tax, legal structure of owning the property. These are all things that actually there isn't a comprehensive guide to this in Ireland. And I know we get emails from investors from overseas looking to where is the one source for this. It doesn't exist.
Yeah, absolutely. So, look, I think property training in Ireland, when people are going overseas and whatnot, they're hunting strategies and yield rather than looking at the fundamentals of the structures that you should actually hold the property within. We would see the financial planning and property training highly correlated, because if people buy the structures, buy their property within the correct structure at the start, they will avail of different relief schemes. Okay, if they buy, just to touch on pensions, there's tax-free rent, tax-free growth. If people have a company and they're buying for the long term, so it's more tax efficient to buy it that way. But again, people can buy through company structures and SPVs, whereby they can trade property and have tax advantages there in relation to capital gains tax and whatnot.
And what's your typical person that would come to you looking for training?
Anybody. Like, there's people who are chasing the American dream.
Within the country?
Within this country, yeah.
We still have a Celtic dream.
That's it. So we've people who might have 1 to 3 units. There's accidental landlords. There's people that actually don't have money but want to get involved in property, so they're looking at deal sourcing opportunities. Oh,
would it be accidentally meeting you by default as a result of the properties they have?
Yeah, well, we've only established this recently enough, so going forward, like, we plan to roll out across the country, but where it's coming to us now is through our client bank. People wanting training that would have inherited property, don't know what to do with it. People who have properties and can't sell it, so they want to know about assisted sales and whatnot. So there's plenty of strategies from rent to lease options, so we'll be mentoring people on that.
So there's a hunger out there for it?
There is a hunger, but the importance of having it in Ireland is that I was at an event there recently, and they were talking about lease options, whereby you can basically take a lease of somebody who has a property, and you'll pay the mortgage for them, and you'll have
rent to rent.
Yeah, that kind of idea on a lease option. But the problem that I have with that is that a lot of accidental landlords in this country are still on trackers. But if you were going to rent that particular property out, it was your primary dwelling, you had to get consent from the bank. So if you go for consent from the bank, you'll be on a buy-to-let mortgage of probably 5%, 4%, 3%, depending on what you lock in on, and you're letting a tracker go that's just a couple of points above zero. So, so when I queried that at the training that we were at, the consensus was like, don't worry about it. But again, from an Irish context, that's why we want people to understand what you can and can't do. It's totally different in the UK. Even the bankruptcy laws in the UK are different. So if people have a buy-to-let portfolio and it falls apart, they can go bankrupt in and out in 12 months, whereas over here...
And would you advise domestic investors to look to the UK to invest in property?
Well, there's the whole Brexit thing at the moment where people don't know where they stand. Again, they're... In the UK, you've got the currency play, you've got the European Union law that will probably change at some case or at some stage in the near future. So again, like, there's fantastic yields here that we spoke about before. In Dublin, you're getting 8%, 9%, 10% on single lets. A lot of receiver sales are out there as well, unfortunately, for people who have to give back their properties and whatnot. But because the rent is driving on, like, there's no place like home at the moment for investing.
So it's quite buoyant.
Yeah.
And yet, did you see in, I think it was the Sunday Business Post on Sunday, Pat Davitt, Chief Executive at VIPAV, was talking about how private landlords are leaving the market despite booming rents because of more onerous regulations, because of a tax system that doesn't favour private landlords in the same way that it favours institutional landlords.
Yeah, absolutely. So what we see people that would sell property in an apartment block, because it's capped with the rent hike of 4%, and they would buy another unit in the same block purely because the shackles are on them for what rent they can charge. So again, the legislation is different on a personal, individual or institutional basis. So again, until there's more alignment in there, you will see more and more landlords leaving. And again, as I mentioned there today on Facebook, is that hopefully with the rent problems that we have out there, there's talk that are going to go on for another 10 years. Hopefully there'll be some kind of government incentive there to get landlords back into the market. And that's where Platinum Property Training will come in to show people how to structure things correctly from the start.
Where do you see the business going at the moment? I mean, there's a lot of... it's not really moving at the moment. I mean, despite what we heard this week in terms of new builds and so forth. Where do you think it's going yourself at the moment?
I just think that there's more and more people are moving out and out again for these new sites that are being built. Dublin, there's not an awful lot of sites that are being built. Like, you see cranes moving around, but it's mainly down the Docklands and that.
I mean, the big news this week was 28,000 commencement notices, which was great. But in an earlier report, it was actually construction output levels and activity levels are actually down to the lowest they've been in 6 years.
Yeah. So that's not going to help the crisis that we're in at the moment. So again, there's people moving into areas that they probably wouldn't have moved in historically, purely because of the price of property the way it's going again. So landlords have an opportunity here, if the government are on side, to come back into the market and basically help with the crisis.
When does the training kick off, Richie?
So we've got a seminar on the 23rd and 24th of November in Dublin. It's in Platinum HQ there at the back of the Red Cow in Ballymount, and we've a 13,000 square foot office there. So the 23rd November, it starts at 8 a.m. and we'll be talking again the things that you mentioned on tax, on the strategies that you can employ, and basically how to trade property and have passive income long term. So
very good. That's great. And that was Richard Collins, CEO and founder of Walfrid Private. Thanks again for coming in, Richard. After the break, we have estate agent Owen Reilly to talk to us. So stay with us.
Broadcasting from the Dundrum Town Centre. This is Dublin South FM.
Hi folks, it's Paddy Cunningham here, letting you know that you can join me each Tuesday evening for a brand new country music show right here on Dublin South FM. Each Each Tuesday from 8 p.m, Country Roads is going to bring you the best in Irish and American country music, looking at that week's country chart and a featured artist. So why not join me each Tuesday evening from 8 p.m. right here on Dublin South FM for Country Roads.
The best in Irish and American country music on Dublin South FM with Paddy Cunningham.
Do you like funk and soul? Are you into big brass sections that are tighter than Prince's trousers? Do you like bass lines that are so filthy that they should be put in the kitchen sink and washed with the dishes? Then tune into Bowl of Soul with me, Pádraig Dooney, every Tuesday night at 7 p.m, only on Dublin South 93.9 FM. There'll be funk, soul, and a nice bit of good-natured, wholesome crack thrown in for good measure. That's Bowl of Soul, every Tuesday at 7 p.m, only on Dublin South 93.9 FM.
8 o'clock Saturday nights on Dublin South 93.9 FM means Pop Gear with me, legendary drag queen Veda, and
me, Ian,
my straight mate Ian. It's a show for people who think that the coolest thing about a car is a car radio. We love classic pop, so if you love classic pop, join us every Saturday night at 8 o'clock
on 93.9 Dublin South FM.
FM? I'm so FM.
Broadcasting to South Dublin on 93.9. This is Dublin South FM.
Here in Dublin South FM with Carl Tallon and myself, Brian Fox. You can contact us on Twitter at iPropertyRadio or email hello@iPropertyRadio.com. So as mentioned before the break, we're now joined by estate agent Owen Reilly. Thanks for coming in, Owen.
Thank you.
So, sorry,
No, go
ahead, please, yeah.
Owen, you would have heard what Richie had to say there in terms of the Dublin market. I'm sure you have a very keen perspective on what's happening on the ground. How many branch offices do you have at the moment, or right now?
4.
And when did you first establish?
January 2008 is when I started trading.
And 4 branches now in Milltown, Docklands?
2 in Docklands actually, and 1 in Portobello.
Very good. That's amazing growth. So, and congratulations to your team as well. In terms of what Richie was saying, does that echo the experience you're feeling on the ground?
Well, I think in our experience, there's a lot of different tiers to the sales market. I mean, the rental market, as you're discussing there, is very dysfunctional. But I think in the sales market, we're seeing a lot of different tiers open up. So, for example, we would see the market up to 400,000 in Dublin behaving very different to the market, say, over 1 million. So in our experience, the market up to 400 is quite strong. In a lot of cases, it's been driven really by first-time buyers. If you were to ask me, the main difference between the market today and a year ago is the amount of first-time buyers in the market, and they're consistently now outbidding investors in our experience.
Oh, really?
Which is the way it should be.
Absolutely.
Is that because of confidence, do you think, Owen, or why? I mean, what is it?
Well, I think the main thing driving first-time buyers is the rental market.
Right.
So they want to.
It just doesn't make any sense to rent anymore.
They want to get out
yeah.
of the rental market, and because in a lot of cases, and we've done this analysis ourselves, and we would mention it in our marketing, it's cheaper to pay the mortgage than pay the rent.
Sure.
But I think that's the number one thing motivating first-time buyers, and I think investors. I think it's just less attractive today than it was a year ago. So what has changed? I think if you look at price inflation in Dublin has now cooled.
Right, exactly, yeah.
However, there's still growth. Based on our transactions, the growth's about 1.9% this year. But I think from an investor's point of view, if you take 5 or 6% annual growth out of the equation, it's immediately less attractive. And I know you were talking there about regulation. So whether it's banning short-term lets, which in general I favour, but I think there's a case throwing the baby out with the bathwater there. And then I think rent cap legislation, increase in tenants' rights, which again I'm in favour of. But all this extra regulation combined with, I mean, the taxation is a topic for over 10 years now.
Well, not just taxation, but the unfairness between the different tax if you're a private investor as opposed to an institutional investor, and that shouldn't be the case.
Or even commercial property investors. And it is unfair. And I do think, and the data is starting to prove this, that the amount of available rental stock is negating rather than increasing. Now, I know you talked there about the Minister Murphy was coming out with some positive news today about commencement notices. A lot of those residential units, if you analyse it, a lot of it is PRS or private rental sector apartments. And whilst that kind of extra supply is welcome, that very much by design is catered towards the high end of the rental market, which we would suggest kind of starts at 2.5 plus. A lot of these developments are going to be luxury by design, and they're going to have on-site amenities like concierge, gyms. Some of them have.
Where would they typically be located?
Well, the Docklands, they're going to be very, very prevalent in the Docklands, Dublin Central, but you're also going to see them in the side suburbs. They're going to be in Dundrum, where we're sitting right now. And it's very understandable that developers have moved into that sector because it's very lucrative, and it's less risky. So you can forward sell the development of say 100 apartments to an institutional investor, who will buy them off plans. And then all the developer has to focus on is the construction program.
Yeah.
You know,
the alternative is to deal with 100 different owner-occupiers or investors.
Yeah, but also at a later point, I think that sometimes the lack of developer funding is something that doesn't get talked about much at the moment. But the pillar banks actually are quite limited in what they're doing in terms of development funding, and it really is the old adage that they really only give it to you when you don't need it. So in fact, we're still meeting private developers who are depending on alternative development financing and paying upwards of 11% for that. In fact, I had a developer yesterday tell me that in recent years he's paid up to 20%.
Well, 11% sounds like good value compared to what I've heard. Like the average interest rate I've heard of is 15%, and other tie-ins as well upon completion, and how well the scheme sells. And so it is understandable that developers are pointing, because with the change in the regulations as well, the units on average can be smaller, and in a lot of cases there's no parking provision. And basement car parks are very expensive, so already you're reducing the construction cost or the cost of the development, and the profits are higher.
You don't need your dual aspect. But tell me, because we've had people sitting in that chair over the last 9-10 months now, and there's been very mixed reaction to that. So what's your take on that?
Well, I think it depends on who you are. I think there are unintended consequences. So, for example, these developments won't be on offer to first-time buyers. They won't be on offer to buyers trading down. Other unintended consequences, in a lot of cases, the Par 5 or social housing won't be delivered on site. Why is that? First of all, the buyers don't want it on site. And second of all, these developments tend to have high management charges. And there are limits that the council can spend on management charges. So they are some of the unintended consequences. And we also are building apartments on average that are smaller.
But in terms of the social housing, Part 5, you have to look at getting bang for buck as well when that's state money. You know, is buying into luxury apartments just because you have a right to do so, is that a smart spend?
Well, I think my own personal opinion is that these units could be designed day one and catered into the development, so they could be in their own section and maybe have their own entrances, so you're not walking by a concierge or access to the gym. So that's one thing, my own opinion, I think they need to look at, that these have to be I think the design around the Part 5 and the agreement has to happen at design stage, has to be factored into the design day one.
That's a really contentious point at the moment, because one of the failings that was pointed to for certain schemes, that Part 5 was clearly evident as you drive in, and in fact a developer proudly taking you around his development or her development will generally point out the successes that you can't tell which ones are Part 5, which is actually the way it should be if we want to avoid certain antisocial behaviour. I think anybody who's driven is it Beach Hill around Donnybrook, you know, would be familiar with that. There's a vast difference that you know driving in, you know, which side of the road to park your car. So these are legacies of a time in the past that we don't want. So I'm not sure that delivering different quality units is the way to achieve that.
Well, if you want the units on site in the development, I don't see what the alternative is, or the
But maybe they shouldn't be on site.
Well, true.
Which caused problems in the past as well.
Sorry, to open up another conversation, I think relying on the private sector to deliver these units has utterly failed. So I think they need to get back to what they were doing.
Why is that? Why do you think they fail?
Well, first of all, it's open to the cyclical nature of the market. I mean, if you look at O'Devney Gardens, there was positive news there in the council. But I mean, O'Devney Gardens, I remember before I went out on my own pricing up at O'Devney Gardens. That must be 15 years ago. So it's very open to the cyclical nature of the market. But I think the market has now moved on. The cost of construction has moved on. These units have got very expensive very quickly, and I just think that the council are not in control because they don't own the land. The market has moved on. There's the criteria that they have set budgets that they can pay for the units. There's set budgets they can pay for the management charges. So I just think they have to look at that whole thing. But like one thing I would say is, of course, extremely in favour of the emergence of the PRS sector, and these are going to be very professionally managed blocks with institutional investors taking a long-term view. But as I was saying earlier, there are unintended consequences.
Yeah, no, it's an interesting one, and again, it's something that we've discussed here at length on the show, but I'm not sure. I think that the PRS has been heavily criticised for other failings in the market. But actually, back to the rental and the higher rental in particular, are you noticing a slowdown at the higher level of the rental market? Because that's something that's been pointed out to us here in the last month by another South Dublin letting agent.
Yeah, I think there are price ceilings out there, unquestionably, and one of our core markets is Dublin Docklands, which is probably the strongest rental market in the city, given the amount of young, particularly technology.
Really, I thought there were a lot of corporates in there though that were just had for staff that were passing through and so forth.
Yeah, well, you would think so, but to give you an example, Google don't go on leases. For example, Google would be a big customer of ours, but Google don't like to go on the lease. They like the lease to go in the name of the employee, because they found in the past they were drawn into landlord-tenant disputes because if you talk to someone in Twitter, the chances are they worked in Google at one stage, and same in Facebook. But our average rental in Docklands is just over 2,400 per month.
For a 2-bed.
Yeah, that's our average rental. Now, we would say there the luxury market starts at kind of €3,000 a month, say for a 2-bed, which perhaps might have water views or a higher.
And what are the stock levels of the premium quality like that?
Well, that's increasing all the time. If you look at the likes of Capital Dock, 6 Hanover Quay, there's other schemes coming online like Dublin Landings in the North Docklands, which Greystar have acquired. So they're all luxury developments. I don't know if you've had a tour of Capital Dock, but it's like walking around a hotel.
I haven't been inside yet, but I'm looking forward to it.
What makes it so attractive down there, though, as a matter of interest? Because there isn't much shopping facilities. I mean, I suppose it's only a few minutes walk to the city centre and to Grafton Street, I suppose.
Well, I've a vested interest now. I'm living down there 12 years, and I started my business there. Look, I think it's a really vibrant neighbourhood.
All right. Well,
there's great selection of cafes and restaurants. There's great personalities, owner-occupiers in their businesses. As you say, it's on the doorstep of the city centre. You can walk to town in 15 minutes. You can walk to the Aviva, Crow Park. You're on the Dart, you're on the Lewis. So I think as a neighbourhood, the architecture is very interesting. It's on water. I think people are always drawn to water. And it's the most cosmopolitan neighbourhood in Dublin. Would you believe this year only 7% of our tenants in Docklands are Irish?
7?
Yeah, which is quite a startling stat.
It's also very disproportionate because we know that the stats are for people buying in Dublin, 1 in every 5 wasn't born in Ireland, but actually only 7% of the tenants there. I'm just wondering, how do we reconcile that? Does that mean that is that reflective of who's gaining employment in the big employers?
I think that's a big factor. I mean, 63% of our tenants in Docklands are working in the tech sector, and the balance will be made up.
Banking, I'm sure.
Yeah, financial services would be quite high, about 25%. I think it reflects a couple of things. I think Irish professionals are being paid the same as the foreign professionals, but I think that attitude to high rent is still there. And I think...
do you think Irish people are more reluctant to pay for premium?
Premium or high rent. I mean, I think the attitude to rent just being dead money, I still think is very prevalent. So what we've seen, I mean, when we first started looking at our data, which is probably about 5 years ago, 65% of our tenants were Irish. And that figure has just been getting lower and lower. And I think it's the attitude to high rents, but also if your typical Irish professional might have a car, that car has to be parked somewhere.
Well,
that's very expensive.
That was my other point I was going to bring up with it. But I would, sorry.
And I think in the tech companies, a lot of them, they're getting their meals on site, they're getting free gym, they're getting free banking, so they're net.
But I'd also imagine too, they're just passing through. They don't see this as a permanent home. They're just Dublin for next 2 or 3 years, and maybe another city wherever after that. Perhaps.
I think that's why they come here initially, for the job and maybe the experience of Dublin as a place to live. However, there are foreign professionals in Docklands now who consider Docklands home, and we see these people buying now.
Okay.
Actually, you've actually sold the placemaking element of the Docklands quite well there. Do you have a personal question? But do you have children?
Yes, I have a little boy, Gene. He's 4.
So our facilities there, because that's one of the criticisms that we get here that we've heard in the show, particularly around the PRS, that we're developing apartments and we're developing coffee shops in underneath, but maybe the space for children and families isn't there. So it's actually really good to hear from somebody who's working and raising a family there.
So the creche options are good. Restaurants are good. They're very child friendly. There's a great restaurant there on Hanover Quay. I've no shares in it, but called Herb Street, and they welcome children. There's no shortage of coffee shops.
And I know it's dog friendly because I bring my own dogs down to the coffee shops there. It's actually one of the most dog friendly places in Dublin.
But it would be fair to say it's lacking in green space.
But is that because it's on the water?
I think it's because it is. Grand Canal Dock itself is an hour strip. However, there is a lovely green area now down outside Capitol Dock, and there's another park called the Benson Street Park that Docklands has been waiting for 10 years, which is going in behind or beside 6 Hanover Quay.
Is that actually happening?
That is absolutely happening.
Okay.
There's a block in front called the Benson Building, which we've just sold, and as soon as construction is finished there, which is scheduled for next summer, the park will happen.
Because I know in Smart Docklands community workshops, that was something that was seen as a dangled promise that it was never delivered. And in fact, the original, I think going back 10 or 12 years, the original drawings and plans are still in the Smart Docklands office on show, and it's a source of annoyance at this point for the local community. So is there a commitment to that going ahead?
Oh, it's definitely going to happen. We've included what it's going to look like in one of our virtual tours, which I can show you.
Did you update the plans from 12 years ago?
Yeah, absolutely. But there's other projects in Docklands. There's a project to green the Docklands. But a lot of these projects can't happen, like the park, until we need to get the heavy construction crews off-site. And then as soon as that happens, there's going to be a great greening project. And that park in South Docklands, people have been crying out for that. But to talk about other options, like Pearse Square, beautiful little Victorian square off Pearse Street, is a 2-minute walk from Grand Canal Dock. And Marion Square is a lot closer than people realise, less than 15-minute walk.
Yeah, no, it's an interesting one. We're seeing this area transform. The one criticism, not only do I have personally, but in fact somebody said it to me at an event there on Thursday night. They were staying in the Docklands and they couldn't find anywhere outside of their hotel to eat after 9 o'clock. And I thought that couldn't possibly be the case in this day and age. The Docklands, you're talking about it being a very cosmopolitan area, and particularly when we have a more multicultural occupancy there as well. How are we still stuck with early dining?
You don't know what hotel they were staying in, do you?
They were staying in the Marker and they could eat there.
Right, okay. I'm genuinely surprised to hear that.
Yeah.
Now, HQ only shut down. You probably read Wetherspoons have just bought it. But there's Harry's Bar right beside it, and there's a beautiful restaurant called Charlotte Key where the Ocean Bar used to be.
Okay.
Really nice.
I haven't been down. I'm obviously way out of the loop on because my association with that is something like the Docklands in the UK at night or Wall Street at night, but I obviously have to pay to visit.
Well, we'll do restaurant recommendations separately. So we're going to take a short break now, but stay tuned as we'll be discussing more with Owen after the break about PropTech and the future of a state agency in Ireland.
Unity Radio for South Dublin. This is Dublin South FM.
Could you and your dog spend 1 hour per week bringing special moments to people in care centres? Or would you like one of our volunteer visiting teams to come and visit your care centre? At Irish Therapy Dogs, we have a dedicated interest in the use of pet therapy for people in long-term or daily residential care. A professional organisation aimed at providing a pet therapy service on a national basis. If you with your dog would like to get involved, or if you would like one of our visiting teams to visit your care centre, then please call us on 01 544 6198 or visit irishtherapydogs.ie for more information.
Do you need a professional-looking website or graphics for your company? Does your current website work on all modern devices, such as tablets and smartphones? If not, you are losing business. Preamp Digital Media provides a full range of solutions to give your company the edge in today's digital world. Please visit www.preampdigitalmedia.com for all the information you need. That's www.preampdigitalmedia.com.
I've always provided. That's what I do. Even when the job shut down, I somehow managed. But the pressure chips away at your confidence. I felt alone. I needed to talk things out. I learned Samaritans isn't just for when you hit rock bottom. I'm glad I called.
It's always worth getting problems big and not so big off your chest. Call Samaritans. No pressure, no judgment. We're here for you. Anytime, talk to us. Free call 116 123 or go to samaritans.ie.
Broadcasting to South Dublin on 93.9. This is Dublin South FM.
With Carl Town and myself, Brian Fox, and in studios is it with us, staying with us is estate agent Owen Reilly. So yes, okay, go on.
Yeah, well, Owen, this is where we get into the fun stuff, because the third section of our show every week is always about PropTech, and this is a real hobby horse of mine, which you well know, and you're one of the firms that has really embraced technology, but in maybe perhaps a different way. So you were one of the first estate agencies in Ireland, not just to take in online bidding, but to find that the offering wasn't ideal and to go ahead and solve the problem yourself. So you might just talk to us about the technology and the innovation that's going on in your office.
So as a company, we've always been focused on technology, and I would look at how consumers have interacted with us over the last kind of 11 years and how that has changed. And for many years since I've been an estate agent, I've heard customers give out about the bidding process, for example, the lack of transparency, the paperwork involved and having to meet face to face to sign, buying off plans, typically a floor plan up on a wall and say, there you go, madam, there's your plot, give me a booking deposit, please. So having looked at all of that, we decided to try and come up with ways we can add efficiency, add transparency. And as part of that process, of course, we had a look at what was available in the marketplace, and obviously PropTech. It's very exciting. There's a lot going on. There's some fantastic products out there, and we looked at some of those. In the end, we decided to design our own platform where we could add more features to it that we felt we needed. I think what we found in short was that there was some fantastic product that only solved one issue for us, but not the 3 or 4 issues we wanted to solve. So we decided to design our own. And another real innovation that we've really embraced and that a lot of the industry is now embracing is virtual reality tours.
So actually, you mentioned earlier that you have 2 offices down at the Docklands, but they're not necessarily 2 offices as we know it, because one of your offices is the virtual reality suite. So how has that been embraced by the development community and prospective buyers and tenants?
Well, we used it to showcase a building initially in the Docklands called the Benson Building, and the developers for that. And I mean the VR developers developed a world-class VR marketing strategy. And we really felt that was going to be a great example of what could be done. Now, what's completely changed since has been the emergence of the PRS sector. The VR was really designed for owner-occupiers and single investors. But the reaction has been very good. It gives buyers an insight, a true insight into what they're buying, down to the interior finishes in the kitchen, in the bathroom, and most importantly, shows how a scheme will stand beside adjoining developments, and also show them the exact view from their unit. So the response was really, really good, really good.
I'm consistently blown away by how immersive technologies like augmented reality and virtual reality are changing. So most recently we've been involved in a project that's watching where, when you're in virtual reality, where your eyes are trained to, and then turning that into data. So, for example, seeing what people when they're in their VR tour, particularly of a proposed development as opposed to one unit, where they're looking, where their eye is drawn to, and reading into that. You know, why is that? And it's actually a really good placemaking tool as well, because people aren't prepared for what they're about to see, so their eye is naturally drawn to wherever catches their attention, for positive or for negative reasons sometimes. But this is all actionable data that's being used now, and I think that virtual reality has a huge part to play in that, beyond just marketing properties for sale. And I know in terms of planning, we're going to be seeing a lot more, not just drone footage and 3D mapping. We're seeing an enhanced approach to digitising the planning process, which is really exciting, and I think maybe a lot of that's going to happen around Poolbeg. So in terms of adoption rates, though, you have a relatively young team that have been with you maybe from early careers. So have your team, they brought that in, or innovation, is it coming from you? Is it top down?
Absolutely. No, we would I would welcome all opinions, and some of them are very opinionated. All negotiators in my firm can do their own virtual reality tours. We do VR tours on all our existing built properties, and we find that's a tremendous marketing tool.
I must have a look at this. I'm hearing from Carol. I've never actually seen this.
Call down to Owen's office in the Docklands.
It sounds so. And I mean, that idea too of the VR, with your eyes, and it's been picked up then as to what your eye is actually catching, because each individual's obviously is different.
But the VR in unbuilt developments is very exciting. But VR on existing properties, and just the whole efficiency of it. Like
is that VR or 3D video really?
No, it's not. It's a 360 hotspot, and then they're knitted together. But I mean, the technology is absolutely amazing. And the market leader in this is a company called Matterport, and we acquired a Matterport camera a couple of years ago at great cost. But it's a brilliant marketing tool, and it's just the whole efficiency of it. One of the more efficient parts of being an estate agent is driving somewhere for 30 minutes on a Saturday to show someone a house who walks in and walks out. So using this technology, you can send them a link. They do a virtual tour. It has a digital dollhouse of the property.
So what? Because the first time I came across this is with Carol here. What's the reaction like from your buying public to what you're talking about, as opposed to going out on site and looking at the house?
They love it. They love it, and it's effective as well.
And have they come across this before themselves?
I think increasingly. I think we're doing them now about maybe 18 months, and initially some people had never seen it before, but I think increasingly are. I mean, they are, from an estate agent's point of view, they are time consuming. The typical property takes about 2 hours. To do.
But they're time consuming and they're expensive as well. So you mentioned there you've a Matterport camera, but actually for estate agents that I've spoken to, both in Dublin and outside of Dublin, they've certainly spoken about the cost per home. That's usually not one that the vendor is willing to take on. So most early adopters, estate agencies, they actually had to foot the bill for that, and not all agencies actually can absorb that. So certainly 2 and 3 years ago, vendors didn't see the benefit of this. They didn't see the value of this adding to their marketing costs. A couple of months ago, we had Michael Kinsler from Kinsler Estates, and he was the first agent outside of Dublin to use this immersive experience for viewing. And again, it took a couple of months for vendors to start to see the benefit, which of course they do. And I think that adoption has really progressed over the last number of years. But what's really interesting is that the portals where all properties for rent and sale haven't facilitated this in the way that they should. So yes, there's an option to click through, but actually the portals haven't kept pace with innovation, which is something I think they're aware of themselves. But I know you would have maybe a different view on how portals need to change beyond hosting immersive technology experiences.
Yeah, I think there has been a lack of innovation. I mean, I remember, like, I'm old enough to, when I first came into the industry, My Home and Daft didn't exist. So
really,
yeah, absolutely.
Okay.
So when I was an apprentice in the business, I was taking the pictures, getting them printed, sticking them on the piece of paper and putting them in the window, or you'd have your little book of who your buyers are. So, you know, Daft and My Home, who are the main portals in Ireland, they did revolutionise how we market and sell property. And I think, as you said there, Carol, I think they would acknowledge there has been a lack of innovation in recent years. And
is that because of the collapse? Or I should say collapse, but the My Home problem with the Irish Times when they bought it over, it suddenly just went pear-shaped on them.
Yeah, I think that would be one factor. Yeah.
I think it's generous to say that's a factor. I mean, the reality is they're large organisations now. They're not very agile. They, to be honest, they weren't hungry enough to innovate when the time was ripe for innovation. And it's a little bit like trying to turn a tanker in an ocean. You know, it just takes too long. So I think they've been working on innovations for the last maybe 2 years, but I just don't know. You know, certainly there's a difference. I don't think we should speak about them together, because I think there's a huge difference between the innovation that Daft is doing compared to the innovation maybe that My Home is doing.
Yeah, no, sure, absolutely.
But to talk about innovation, I mean, Irish estate agents shouldn't be waiting around for other people to innovate the buying process. And I would include the portals in that. Irish agents should be looking to lead innovation.
But how? How can they do that?
Well, a cooperative has been formed of Irish estate agents, and there's a couple of goals that the group has.
Are these all independent estate agents?
Larger groups involved as well.
Okay.
I think there's a lot of things motivating different agents in different ways.
But they still embrace proptech, though, would they? I mean,
absolutely. But I think there's a lot of proptech.
Yeah,
there's a lot of proptech.
Yeah.
There's a lot of proptech out there. But I think Irish agents need to look at what are the inefficiencies are from the consumer's point of view, be it search engines, be it getting data on buying a property. Like when you're making the biggest transaction of your life, you should be able to look up on a given street what the last 5 houses sold for. What was the asking price? What was the selling price? What was the profile of the buyer? How did they fund it? Agents have all of this. Agents have all of this information. So the goals of the group is to lead innovation and to decide on the best strategy to develop our own agent portal and take control of our own marketplace.
Okay, that's interesting. How can people get involved in that?
Well, there's a group working on it at the moment. By all means, contact me directly. We hope to have our first AGM in January, and the take up of interest and people joining the group has been phenomenal all over the country. And as I said, some are being motivated by different things. It could be their experiences with the portals, because let's be honest, there is a duopoly out there at the moment. Others by the lack of innovation, and others by leading innovation. There's amazing things on the line, be it online bidding is already here, but what about smart contracts, online mortgages? I know, Carol, you've spoken a lot about the artificial intelligence and what it can do for the industry. So there's huge change on the way, but agents need to stop sitting around and waiting for other people to take the lead. We need to take the lead.
You need some leaders. We'll leave it at that. That was estate agent Owen Reilly. Thanks for joining us today, Owen. It was very good of you to come in. You can get in touch with the show by emailing hello at iProperty.com or on Twitter at iPropertyRadio.
Okay, that's it from us in studio today. We'd like to thank our guests for joining us. Owen, thank you so much for being here. And also I want to thank producer Katie Talon and Adam Duke on sound. We're back the same time next week from Carol Talon and myself, Brian Fox. Have a great week.